Sawa, good. So welcome guys to another session. Hope everyone is doing great. And you're going to enjoy this presentation with my colleague here is Edwin. Kindly Edwin, introduce yourself.
Good evening all, and welcome to today's session.
Yes, awesome, Edwin. So today, guys, we're going to be covering something that is quite critical in terms of risk management. We know as traders that, we really need to come into the market, make sure that you know what before you take that trade, make sure that you have a stop loss in place, you have a take profit in place. And that means you must make sure that you're taking into account the volatility of the market. That means your stop loss, as traders, we experience these situations where like you put out a stop loss, and at that point in time, you get wiped out, and then the market reverses at that point in time. So today we'll be covering how the ATR will be helping you out in that, so that you're not whipsawed in the market and you're able to take into the trades and making some pips, and hopefully, get to earn an income out of this business. So let's go on straight. Introduction. The ATR is basically called the average true range indicator. It was developed by technical analysts by the name Willis Wilder as a volatility indicator. It is applied in financial markets to measure volatility for various assets such as forex, stocks, and indices. And all these are products that are available onto our platform. Those of us who are traders with FXPesa, remember we have all these asset classes with us. We have commodities. We also have the NSE derivatives. So you can really use the ATR using all these on our platform. The ATR does not indicate price direction nor the strength of the trend. This is really important because most guys know indicators as tools that you use for price direction, strength, probably even momentum. But basically, here we are looking at the volatility aspect of trading. Yeah. Instead, the indicator only measures how far price typically deviates from the average during a particular time period. High ATR value indicates a high level of volatility, while a low ATR value indicates a low level of market volatility. Basically, to explain these will be as simple. Let's say the market was in a consolidation level. When the market is consolidating, then that means there's low volatility. So the ATR value at this point in time will be low. But if, let's say there's a breakout session, there's some breakout, then you'll tend to see the ATR tending to rise, in this case, showing that there's some volatility in the market. Examples will be presented later as we move forward. Next slide. The indicator once plotted on the chart is a single moving average line, which is calculated by the true ranges, usually on a candlestick chart. So basically, a new ATR reading is calculated as each time period passes, e.g. on a 1 minute chart. A new ATR is calculated after every minute has elapsed. On a daily chart, ATR calculated based on daily price range. So basically what you guys need to know is that when you're looking at the ATR, basically it shows the average of the last, let's say if you're using the 14 period, then you're considering these as the last 14 candles on a specific currency, pair, and time frame. So let's say if you're looking at the 1 minute time frame, if you're looking at the 5 minutes time frame, if you're looking at the 15 minutes time frame, let's say on Euro USD, then you'll be looking at the last 14 candles, and that's how you're able to get the average of those 14 candles and figure out the ATR, which is normally in terms of pips. Now, ATR is commonly used as an exit method that can be applied no matter how the entry decision is made. Once again, here traders, Risk management. This is a tool that you can really use as a risk management tool, especially when you're covering the swing highs, swing lows. Then the stop loss, really, you could consider the ATR to define at what point in time you're supposed to get out of this market if your analysis is invalidated. That means it gives you an allowance for your trade to play out. Next slide. So the ATR was created to allow traders to accurately measure the daily volatility of an asset by using simple calculations. Trader finds the greatest of the absolute value between one, the current high and current low, current high, previous close, current low, and the previous close. Basically, if you're looking at your candlesticks, this is where, like, if you're looking at the current high, you must be able to look at the difference between those both, and that's how you'll be able to define the volatility of that current pair in terms of pips. Now you're looking at, let's say, the current high and the previous close. We all know candles, they have we have the opening price, the closing price. We also have the high price and the low price. So basically, you're able to determine these values through that there. And then that point is the current low and the previous close. This, once again, if you're looking, let's say, at let's say a bearish engulfing candle. So this is where, like, you could really look at it and have a defined way of identifying the ATR. For example, to get the ATR of the last 5 days, if N is the maximum absolute value, which is found as I've described up there, then you'll have to add N1, N2, N3, N4, N5, and divide that by 5. Remember, it's the average. You are looking at in this case, like the last 5 days, then you should be able to use the 5 number to determine the average. Typically, the number of periods used in the calculation is 14. If you guys, later we will have a look at the charts and you'll see we use the default, basically, which is the 14 number. Yeah, so this is what I was talking about. If you look at this ATR application, average true range does not indicate the direction in price. This is key. Once again, a repetition. We need to emphasize on this because so many people may try to confuse the applicability of the ATR. Price could be pushing lower down the trend, but volatility could be increasing. This, once again, if you look at this indicator, we can see, if you look at those trend lines, the market has come out of some like slow movement. It seems like there was some kind of a consolidation out there, and then all of a sudden the market broke out. Yeah, and as you can see down there on the indicator window, you will see the ATR was rising. Now that was the volatility. That's how the ATR comes in to measure volatility. Basically, when a rising ATR means an increase in volatility, and a fall in ATR means a decrease in volatility. That is something that we really need to look out when we are using the ATR as an important tool.
And maybe, Robert, just to emphasize,
yes.
When we talk of ATR, we are talking about this graphic here.
Yeah, on the indicator.
So yeah, as it continues to rise, it shows that the volatility is building, and that should not be mistaken by the direction of the market. So it has no relation in regards to where the market is headed. Rather, it just helps traders to know when there's a huge movement in the market or when volatility is building in the market.
Yeah, couldn't agree more, Edwin. So as traders, we need to have a clear distinction when you're looking at direction of price, because at times this can be confusing, especially, you've been using indicators like the moving averages are kawaida that tell you, when the trend is up, the moving averages tend to be looking up, so this one basically measures the volatility. How volatile is the market? We all know the market moves, from a low volatility to high volatility to low volatility. So the ATR here will come in handy to help you determine how the volatility, how volatile that market is. And that's how, as you can see from the chart window, we can see as from the indicator window. On the chart window, you can see like price was dropping, and on the indicator window, price, the ATR was rising. Basically, that was the measurement of the volatility. Unlike what you'll probably consider in another indicator, it will be reverse. On the chart window, price will be dropping, and on the indicator window, then that let's say the indicator will be using will be dropping also. As you can see, this is totally unrelated because it's all about the volatility. Yes, Edwin, maybe you can add on to.
Yeah, so if they look at this period where we have very short candlesticks, that means that the market was more or less in a consolidation, or price was not moving as much in terms of range per candle. And that's why we have ATR almost flat within that period. But as time went by, with rising volatility or with increase in volatility, starting from the period which is marked by that trend line, as you can see, the candlesticks were sort of taking one direction and were becoming bigger. That would correspond to a case where we have ATR progressively on an upward move, which would then indicate that within that period, which is marked by these two red lines, these two red trend lines, then that is the period within which volatility was building. So yeah. Then it's also possible for periods of low volatility to coincide with strong trends. So like in this case, if you look at this chart, the trend line is marking a period within which price was moving upwards. So we had a very strong uptrend, but that uptrend should not be mistaken by volatility. I mean, the fact that price was trending strongly upwards, it doesn't necessarily mean that within that period we would have high volatility, because as you can see from our ATR graphic, within that period where we had a strong trend, we also had low volatility. So it means that though price was trending higher, the pace of the price was not quite fast as you would expect. Then through average true range, though average true range cannot be used for entry or exit signals, it can be used as part of trading strategy for optimal risk management. So most traders try to use this indicator to sort of set their take profit and stop loss, or to manage their risk. So for instance, when ATR is high or sloping quite steeply, we may have to set an ambitious profit target and also set wider stops. So when it's quite steep, it means that on average, candle by candle, price is moving in a volatile fashion. So it would then mean that within such periods, a trader should be more, should lean more towards setting take profit and stop loss within reasonable margins. A lower or flat ATR would mean that volatility is low. And in such cases, then a trader might be more, a trader can therefore set tighter stop loss and take profit as well. So this is an example. So if you look at this chart, where we have a range, we have a corresponding flat graphic for ATR. So it means that within that period when the price was within a range, the range within which price would oscillate up and down is quite narrow. And therefore, then since the price is not moving a very huge distance, then a trader can therefore afford to set a narrow margin for both stop loss and take profit. But when volatility starts to build, as can be seen by the period where we have the purple trend line, you'll notice that ATR was increasing, which would suggest or which would imply that volatility was building up. So the way you'd set stop loss and take profit when volatility is low, as marked by ATR within the range period, would be different from how you'd set your stop loss and take profit when volatility is high, as can be seen by the purple trend lines. So when trader uses the average true range in their strategy, they can easily access current market volatility to see the most ideal level to set stop loss and take profit. So as I've mentioned, you can use ATR to guide you to know where to set or by how many pips one would want to set their risk parameters. So the greater ATR reading of an asset, or with a greater ATR reading of an asset, the wider the stop loss range. And conversely, when you have smaller ATR reading, then you can be able to set narrow stop loss and take profit for your trades. Then I think we can jump into the charts just to see how one can add ATR and how you can use it to set stop loss and take profit. Robert, tell me once you're able to see MT4. Has it been projected, Robert? All right. So here we have a chart. So this is euro pound. So on MT4, you'll just go to insert. Then you click indicators. So ATR can be found under oscillators. So it's called average true range in full. So when you click on it, you can keep the default settings. So as Robert had mentioned, it basically tries to average prices based on the last 14 periods. So if you're using an hourly chart, you're basically trying to find the average price movement within the last 14 candles. Then once you click OK, it will be added on your chart. So once you have it ready on your chart, you can be able to get the reading on the top left side. So like for this particular pair, the ATR reading is 12 pips. So it's written as 0.0012. So the normal way you'd be able to gauge or you'd be able to calculate pips, it's the same way that you'd be able to have the reading for ATR. So the fact that it's reading 0.0012, it basically means that the average true range of this pair at this point in time is 12 pips. So once you get the reading, if like in this case, you are seeking to place a sell position on euro pound, then it's very easy because on FX Pesa platform, you'll basically go into your charts. So we have a calculator provided on the platform.
Sorry there, my network, yeah?
No problem. It happens. It happens.
Issues with my network.
Just trying to pull the FX Pesa platform to demonstrate how to use ATR to set the stop loss and take profit.
Oh, awesome, awesome.
So tell me once you are able to see the FX Pesa platform projected.
Yeah, it's live, yeah?
Yeah. Excellent. So we were looking at Euro GBP. So I've just demonstrated how to add ATR on the MT4 and how to get the reading, ATR reading. So we've seen like Euro GBP has a reading of 12 pips. So if, for example, you are looking to set a sell position, Euro GBP, on your FX Pesa, it's quite easy. So you'll just select the pair. Then if the position is to sell, you'll just click the sell, the selling price. So once you click the selling price, you'll then activate stop loss and take profit. Then when it comes to setting stop loss and take profit using ATR, most traders go with a factor of ATR. So for example, you can decide to set a stop loss with a 1.5 ATR and have a target for your profit at 2.5 ATR. So in this case, you'd come to your settings for stop loss. So when it comes to risk management, as a trader, you should look at it from the point of view of the risk per trade. Like if that trade is to eventually hit stop loss, how much money are you likely to lose? And FX Pesa platform makes it quite easy for you as a trader. So our risk per trade is that amount which reflects as the value of loss on the stop loss side. So if, for example, you have an initial capital of $1,000, the rule of thumb is to have traders not risking more than 2%. So it means that on average, for each trade, you should be seeking not to lose more than $20. So that amount should be the amount which is reflecting as the value of loss on the stop loss side. So the one that I've highlighted here. So in this case, if you are to set your stop loss and take profit on the basis of an ATR reading of 12, which is the current reading for this pair, you then take a 1.5 factor and multiply by the number of pips, which is 12. So that should give you 18 pips. So you'll just come and punch in your pips there. Then you'd then set your take profit. So if the factor for the take profit is 2.5 ATR, you'll take 2.5 times 12, and that should give you 30 pips. Then once you set that, it's then that you'll be able to decide what position you will trade. So in this case, the lot size or the contract size should be the last setting for us. So once you've determined how far you'd set your stop loss and take profit, you then set the contract so that you can ensure that your risk per trade does not exceed $20. So in this case, you will notice that the most optimal position for us to trade would be a position of 0.09. So if you were to trade 9 micro lots, then it means that the much that we would lose upon this trade or upon price hitting stop loss is around $19.51. So once you've set your stop loss and take profit, you can then proceed to trade the pair. So yeah, so that is how you go about that. Robert, do you have anything to add?
Yes, actually, this is something I've been talking to guys here in Tika. I think the web trader FX Pesa, this is some tech that really comes in handy. Yeah, you know, back in the day when we used to calculate banner using a pip calculator.
Yeah, or even doing manually in order to establish price, because when it comes to MT4, you have to establish your stop loss order rate and take profit order rate. Yeah, I mean, you have to identify where those prices will sit on your chart.
Yes. So yeah, everything is done for you. The calculation is done for you. You already know the margin that is required. You know the pip value. So this is a game changer, and this is where we really know that every trader needs technology that makes their work easier. You know, you really don't have to keep calculating some of these things. Yeah. So the web trader is really something top notch in terms of helping traders to work out their mathematics and knowing how much money they are willing and ready to lose in terms of the stop loss, and they're able even to take up their take profit. And also maybe if you realize, you know, when you're coming in and you're doing the calculation and you realize, you know, my risk to reward ratio is normally 1:2, you're able to come in and realize, yeah, by the way, this take profit should be maybe, let's say, that 6 pips and above. So it becomes easier with no need for you to adjust anything. You just need to punch in the numbers, and you know, FX Pesa will do the rest. So I think for me, this is something that every trader would value.
Yeah, and the other beauty with having traders registering their accounts under FX Pesa is the versatility. It's possible for you to also access MT4 through the same account. So when you have an FX Pesa account, you can as well be able to trade on your MT4. So it makes it quite easy for you in terms of account access.
Exactly. So guys, really, the ATR, remember, as we summarize, this does not show direction in any way. It's basically to show you volatility in the market. When you look at the in case of a consolidation level, you'll realize that there's some low volatility and the ATR will normally be falling, but there are some situations when it's not. But in this case, in most cases, when the market comes in, there's that breakout, a retest of the structure, let's say retest of the support resistance and a drop, then you'll realize that the ATR will tend to be rising, meaning that there's now volatility in the market.
All right, so I think that's pretty much it. So the other thing would be to remind traders to be on the lookout, especially if you have positions with USD, because at 9 we have interest rate decision for USD or United States interest rate decision. And the expectation from the calendar is that the rate might be increased by 750 basis points. So that's a huge margin, and that is likely to cause volatility across various assets where we have United States dollar as a component. Then following that, at around 9:30, we have a press conference. So again, depending on the discussions that will be held and the things that will come out of that discussion, then that again might also fuel the movement of the same asset. Besides that, tomorrow we have a session again, Scan the Markets with David, our analyst. And on Friday, we have the second session. So this is a series It's called The Ins and Outs of Trading. It's conducted by a guest. He's called Ban. Such a difficult name.
Yeah, let's do it, Ban.
Skoropinski. Yeah, let's stick with Ban. Yeah, so it's a very interesting series of trainings that are ongoing. So be on the lookout for that as well. Otherwise, that marks the end of today's session. So I would request you to follow us on our socials, especially subscribing to the YouTube. You can also encourage your friends and relatives who might be interested in trading as well to follow us. And yeah, so that will be a good opportunity for you to learn and improve your trading experience.
Yeah, so Edwin, to add on to that, we have a session that started on Monday with Rufus Kamau, episode 1, where he's talking where he's handling trading from novice to a pro. So basically, guys, if you're totally new, especially now, we as FX Pesa team, we are working from home. No physical trainings are happening. So basically, you can pop into these YouTube classes, and Rufus Kamau will take you through everything. If you're a new person, you'll definitely get to learn more on the ins and outs of trading, and that means if you're a beginner, you don't have to pop into any of our physical training centers in Kitengela, Nairobi, here in Thika, Nakuru, and Eldoret. But Eastleigh is open. So if you're anywhere near Nairobi and you're not able to access Westlands, you're most welcome in our Eastleigh facility.
All right. The other thing is to request you to follow us on our socials. So I'm on Twitter at EWGituko, and you can as well follow me. So I have 2 handles at Eddie Gituko, that is EDYGITUKU, as well as at EWGITUKU. How about your?
Yes, for me, Twitter, find me Mambogo Junior, Mambogo, MAMBOGO, Junior, JR. And then on Facebook also, Mambogo Junior, MAMBOGO, JNR.
All right, so that marks the end of today's session. We hope you've been able to learn something, and that you'll put it into good use as you trade.
Yes, actually, Edwin, to add on to it, due to the volatility that is coming up, I think this will be the right time for guys to test out
apply
ATR. Have a look at how your charts will behave. Look at your favorite currency. Look at across board. Look at what it is that will happen to the ATR when the market moves start playing out.
All right. So that's it until our next session. So I wish you all happy trading experience.
Happy trading. And a disclaimer, it's always important to know that these are margin products. They carry a high level of risks. So make sure that this video shouldn't be construed as an investment advice. This is purely educational analysis. Otherwise, cheers, guys. Let's watch out, close your positions if you can, move your stop loss in profit, make sure that your risk management is at play as we move into Fed in the next 20 minutes. Otherwise, cheers from me in Thika. See you.
See you all.